Natural gas. It is Thursday, so we have the Monday holiday. We're getting natural gas at 10:30, as we always do, and then we're getting oil at 11 o'clock today. Natural gas, quite a move already this morning. I got the chart up here. At about 2 in the morning, we're sitting at about 3. We're now 10 pennies higher, let alone where we've come from just the last couple of days. Started the short trading week off at about 335. We trade all the way down to a low yesterday of 295. We're back to 310. So I jumped right away to the 11 o'clocks. What's nice is these actually line up very nicely. And it's because a lot of these contracts were set maybe when it was back here, 8 in the morning. So the 11 a.m.s have a 310 price point. We're trading at 309. Okay, so you're going to have a little bit of value to the downside. There's your bullish spread, 20 cents to the upside, all premium because you're out of the money. And then there's going to be your bearish spread, a little bit of intrinsic value because you got about a penny, which can be 10 ticks. Not much, really, here, right?
And what's going to be interesting is that so these are the numbers from last week, folks, where it was really cold across the country.
Okay.
And now it's warmed up. I mean, so it's going to be intriguing to see, what the market expects versus, what we're going to come out here.
Yeah.
And the contract itself has been so volatile.
It really has. This is one, you talk about Kevin Hincks' defined risk, man. You're trading natural gas right now. You'd be a smart person to have some defined risk in this market because it can go 10 pennies one way or the other. So these are the 11 a.m.s, right? So we're looking at about $30, 10 of which is intrinsic value, and then $10 each side of the premium. Jump into the noons. Here would be our bullish spread. So what's nice is I line them up even above, and you can see exactly the difference in the bid offer, right? So instead of costing you $11 here, this one's going to be costing you 14 on the bullish side.
Same numbers too,
That's why it's nice when you line them up like that, right? And then there's the bearish one. Again, to recap it, there's your different in the bid offer. And you got same intrinsic value, which is about 6 or 7 ticks right now. And so you're looking at 33, 34, which represents only 3 to 4 pennies of movement. Now, this was the noon that I pulled up.
That's interesting,
man. It is interesting. Not a bad trade, in
no.
my opinion, for sure. Now, jump in. Let's see how these line up. You're going to have the 8 till 230s. Now, those line up nicely. Just jumping for a second. Okay, so these are going to be your option with 310. Now, this is nice. We'll use it right here again. So here's your bullish one.
That's wild, man.
Again, looking at the difference, right? So instead of paying 14, you're going to be paying 23, okay?
Yeah.
But again, you have until 230, and you have above 330 exposure, right? You now have 40 cents of exposure as well. Very little premium having to do with the 40 cents of exposure. A lot of it having to do with the time that you have. But nonetheless, there's a realistic chance that it could climb above 330. And same thing on the flip side.
On the other side, too.
Right, or below 270.
Right.
Yeah, and selling that one. You have your little bit of difference here because you have intrinsic value, so you're looking at 49.52. So about 5 pennies of movement you would need, and you're starting pretty close to 310. So we'll see where it shakes out. What was this again? So so you had about $30. The noon had about 35, and then if you want to go for the big ones till 230, you're looking at about 50, 52. And that contract just sitting up there hanging, waiting.
Look at that, man.
Yeah.
It's going to be a good one. Let's go look at the let me look at that contract. So intraday so far. So right now we get natural gas up 3.8%. Okay, so let's see. 309. Oh man, this is interesting too. It's at the end. It's at the bottom of a consolidation. Okay, so yesterday.
Yeah, that's why
you go down with light volume, but you get light volume up today too, man. Wow.
I mean, you can always take just one side of this trade, right?
Yeah.
I mean, because as you said that, I was saying there's a realistic chance. Just leave it there for a second. Before, as 330 on this chart is right here. So that's your bullish side.
Right.
And that's where the 11 and the noon ones are capped out.
Okay.
But then the 230 gets capped out at 350.
Yeah.
Well, anything's possible really in this market, right?
Yeah.
It's at least possible where it could jump up to here in a day. Just look how big the previous day's bars are. But the downside seems a little bit tough because it hasn't been down to 270.
No,
270,
I know.
270, right there.
Yeah.
All right, versus 290, even 290 is right here.
Yeah, 298.
Which would seem like that's the farthest it would go. But like I said, those big, I know, right, would seem. You got to put that disclaimer in this market for sure. But that's why I say you're really paying for the time because 20 cents a movement is a realistic move, but it's always nice to have that opportunity.
Okay, so I'm going to speculate to the downside, and this is why. So look at this, baby. So that's yesterday, right? So yesterday,
yes,
at 3:06, you had 4,300 contracts. Now we got up there this morning with 1,400, yeah, and you only got 357 right now, and you're 6 minutes into the bar. This will be intriguing, man, because if it does go down, this thing could blow out its lows, which would be really a trip.
Yeah.
And that would be counterintuitive, especially for the cold that we got last week.
Sure.
You know?
Sure.
But guess what? We're already at the end of January, so, you know.
We'll find out.
You're talking about, what, another 6 weeks of, 7 weeks of really cold weather? You know?
Yeah. Right. Yeah, once you're into March, maybe middle of March, you can get some storms, but it's...
Yeah, even 30 degrees out west. I mean, it's, you know...
We'll find out.
Dow Industrial's up 15, NADEX up 45, S&Ps are up 5. Stay right there, folks. Tommy and I come right back. Welcome back, folks. So, natural gas fell 163 BCF.
Pretty close to the estimates, right? Coming in at about a 158 decline they were looking for. Jumping back to the charts. Not too much of a reaction right off the bat. We got a little bit of a spike up to almost 311, down to 309. Looks like the market trending a bit lower as we speak, but as we always know, this takes a couple minutes for the market to figure out how they're going to digest that type of a number. And the first digestion is to the downside.
Yeah, and the movement's not, well, I guess it's moving a little bit more, but this is where the option market makers, I mean, you can see that premium wasn't that much, which is, you know, we thought was kind of unusual. I mean, do you know what I mean? Because it's moved around so much, you know what I mean?
Yeah, I would only caveat that with saying we've been 60 seconds outside of the news, you know, and they got to last another 90 minutes for that pricing of the premium to be accurate. Because the noons, we're only looking at 3.4 pennies.
I know.
Well, that's what I'm saying. So we could get that. I mean, we already almost got that move. This bar stretches from 307.5 to 311 almost, right? That's 3.5 pennies in 60 seconds of movement. So not bad premium, yeah. So we get crude oil at 11 for the inventory numbers.
Yes.
And just a quick kind of summation, we're trading 52.81. I took a quick peek at some of the defined trades. You could have a noon exposure, which starts at 52.75, so we're trading at 52.81, and pretty close, right? You're only talking about 5 pennies away. This would be your bullish spread from 52.75 up to 54.25. That's costing you about 25 cents. Same thing on the bearish side, costing you about 25. You're looking at about $50, represents 50 cents a movement that you would need. Keeping in mind, though, that if you only close out one of these trades, as if you just let them go to expiration, you can only make $1.50.
Right.
Now, keeping also in mind, though, that you could always trade out one, leave the other one for value, and you might get some oscillation. Nonetheless, a little bit more premium than we might normally see.
It is.
But guess what, man? These commodity markets have been rocking. You just said the dollar just had huge movement, right? We had big movement in natural gas, big movement in crude. It would make sense. It might be a little bit more premium. And that still might be a good trade, depending on if you think it's got more than 50 cents a movement in the next 90 minutes.
Stay right there, folks. We get Fast Market coming up next, and I'm Basil Chapman, Dave White, Steve Rhodes. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Wow, look at them, folks.